Hello and welcome back to my video blog. So I sent out an email recently and I get questions all the time about real estate, and those questions I got range anywhere from, gosh, what improvements should I make to my house to make it more sellable? How long does it take to sell a home? To, does whoever's president affect real estate market? But the one I got that probably is the most common lately is about taxes. And there's certain kinds of taxes in real estate. The two major ones would be what we call capital gains tax, and that's when you sell a property for a profit. And the other is property taxes, which is based on your value and sometimes what you paid for the house. So again, I cannot by law, full disclosure, give any tax advice, but I'm going to give you some basics here on this because people oftentimes think if I'm going to sell my house and it's my primary residence, I have to go buy a new one, otherwise I'm going to get taxed. So here's the basic framework of how it works. If you've lived in a house 2 out of the last 5 years, the IRS considers that your primary residence. If you're a single person and you have a gain of up to $250,000, that $250,000 for a single person on your primary residence, tax-free. Anything above that, you would pay whatever your capital gains rate is. If you're married and there's 2 of you, then you get up to $500,000 of gain on that residence and that sale. You don't have to repurchase, you don't have to do anything else, it's just sell the property, and as long as you're primary, $250,000 free, no taxes. If you're single, $500,000 if you're married. The other question people think about is property taxes. So we have a lot of people who have lived in their homes a long time here, and oftentimes they have a low tax base. For example, let's say they paid $200,000 for their house, and their taxes are roughly $2,000 a year. Now they go to sell it, they want to buy maybe a little bit larger house, and they sell it for $600,000. And they want to go buy a house for $700,000. When they buy that house for $700,000, that's going to be taxed based on a value of $700,000, and at about 1% a year. Don't quote me on this. At about 1% a year, that means their taxes went from $2,000 to $7,000 a year. So we have people that don't make the move because they don't want to lose that low tax base. Now there are certain vehicles. The one I'm just going to mention here is what we call Prop 60, and that's where you can move your tax base to another house. So if you have a house you paid $200,000 for, you're now selling it for $6,000. If you go and buy another house basically for equal or lesser, then there's some variations based on time, that you can transfer that tax base. And the purpose was that if you've lived in a big house for a long time, kids are gone, it's just you and your spouse or whatever, you don't need the big house, you can sell it, go buy a smaller house and not get dinged with higher taxes. So there's those two tax issues that we often look at before talking to someone about a house. Again, I can't give you tax advice, I just want you to be aware of those things. So if you have any questions on that, certainly call us immediately. And what I want to bring up here is every year since my kids have been in, say, 3rd or 4th grade and now they're in college, we've been renting out a theater here downtown and doing our movie event in the holiday season. We're going to do it again November 20th, okay? If you're on this video, you probably should have got an invite, but if you didn't, then this is your invitation. So just call our office at 781-3750, and that's area code 805. Just give us a head count, and that's November 20th. It's a Sunday. We've rented the theater in the morning. We open the doors at 9. The movie starts at 9:30. We're showing the movie Trolls, so we'd love to see you there. Last year, I think we had over 600 people, lots of kids. It's a great family movie, so call us or stop on by if you'd like to see that movie. Thanks again for checking in. We'll talk to you soon.